Hello and welcome to another Major Market Movements End of the Week Market Review for August 28, 2015. I'm Quad G, and in this video we're covering the Forex markets, and I've broken this section out because combining it with the peripheral section was causing the videos to go into about an hour in length. So I've decided to go ahead and break this out of there, even though it may be relatively short. At least it'll be easier to find or discard if you're not interested in it. So start off here with the US dollar index. The price certainly has come up much faster and deeper than expected. So far we've only got 3 waves down. We've come up and violated this previous impulsive move to the downside, and now so this changes the count. Could this still be a subwave 2? Possibly, but the probabilities for that have reduced probably under 50%, so it's fallen out of favor. It looks to me as though the market's trying to come up and possibly fill in this manic move to the downside, which really started at about 96, 95, somewhere in there. So it's possible that it's trying to come up and fill that spot before turning down for another correction to the downside. It may be just a simple correction, maybe something deeper. We'll take a look at that in depth in a little bit. But for now, this is not moving along as expected. We're not getting a clean impulse to the downside from this previous top up here at 98.30. So we'll be looking to adjust our position here as we wait and see how this upward structure finalizes, possibly up here a little bit higher, and then maybe turning back down. So still in watch and see mode. And the QG3 was in a bearish alignment, but with this recent surge right back up here, it's now turned into a neutral alignment, even though the price still is finding some resistance just under the 20 DMA. The weekly closes just as an inside positive week because the previous week was such a massive bearish candle to the downside. But so technically, even though it looks bullish on a weekly basis, since we began and closed inside the range of the previous week, it's just an inside positive week, which is neutral. The EWO, really don't have anything to show you there. RSI, come back up into the 50 level, which is neutral. And the MACD, which isn't on here right now. Hold on real quick. Put the MACD on here. Oh, not settings. Studies. The daily is still open to the downside, and the weekly is open to the downside as well, so that's both bearish. So the dollar certainly come up quicker than expected, deeper than expected. There's still some key points of resistance up ahead. But even with that, I do think we've shrugged off enough bearishness that we may be entering more of a neutral phase. We may not get another big sharp move down. So again, we'll talk about that in a moment, more in detail in a moment. All right, I'm looking here for, let's go ahead and look at the Canadian dollar. All right, so here's the Canadian dollar. I think we're getting close to maybe topping out here fairly soon. 1.34 handle is a key level of resistance, which I'll show you in a moment. I think so far off of this bottom, we've got 1, 2, 3, 4 waves to the upside. I think we could still see one more higher high, maybe touching that 3,400 handle for a final fifth, and then maybe settle into a larger correction. The QG3 is still in a bullish alignment to the upside. The week does close as a bearish inverted hammer, so that's bearish. And the EWO has set up a double negative divergence on the top side. If you compare the swing lows, or swing highs, excuse me, in the price, we got a higher high, another higher high in the price, but in the EWO we got a lower high and a lower high for a double negative divergence. So we're definitely moving into some topping action here. And pretty much same with the RSI. We've got the a double negative divergence on the top side of that as well. The weekly MACD is still open to the upside. And the daily is just ticked over to the downside today, open to the downside. So there is still a chance, I think, of maybe one more push higher to fill out the Elliott wave count. It's probably just going to be a small incremental high, and then there's a chance for a very large, lengthy correction to the downside that I think could come down into the middle of this congestion area, maybe around the 2,400 handle or even lower. So a sizable move for that correction. It could be something more significant, but it would have to be one quick impulse all the way down here to the 1900 handle to secure a major top. So we'll see what we get. Let's take a look at the euro. All right, so the euro on, let's look at the daily. Euro also got beat back down a lot farther than expected. We still could have embedded ones and twos, but it's less likely so. Actually, I've got a chart coming up that'll show you some more detail about where we could actually see a bottom fairly soon, and at least a corrective bounce to the upside. We've got the 20 DMA right here as well, right there currently today at 1142. That's a key level of support. You can see back here in mid-August, it did provide support, so it could supply support again. The euro on the weekly, a big inverted hammer candle to the downside. That does set a key top on the weekly. That high at 1.1712. So it's a key level resistance. Could see some follow through to the downside next week. And we also close the week in the bottom 10% of the weekly range. So that also invites, increases the likelihood of more downside next week. EWO, not much to see there. RSI came and cruised well above the 70 level, and then we got smacked right back down. We're right back into the 50 area. Of course, the 40 level is a key level of support there as well. But getting all the way down to 40 could cause the price to make a new lower low compared to this last swing low. So that would break the potential uptrend. The euro on the MACD is still open to the upside on the daily. And weekly, we're still open to the upside as well. So euro's kind of in a funky place right now. Definitely looking bearish in the short term. The midterm is still very neutral. Long term, still very neutral. It would have to get a very serious turnaround and radical reversal right back up to keep this market from coming all the way down here and producing a new lower low. And if the price was to come down here below, say, let's see, this low here, which was at 1.1017, you break below that and you've just killed your uptrend potential with a new lower low. I want to take a look at the Aussie. That's a monthly. No, not that one. Here's the daily. So I think we're drifting along here. We could be moving into a final low, but just not quite there yet. We could still possibly push very shortly below the 7,000 handle, but that could end up being a final low, which I'll show you in a minute on the Elliott wave charts. The QG3 is still in a bearish alignment to the downside. The weekly closes just as a negative candle, but well down into new territory. And currently we do have a buildup of, in the EWO, we do have a buildup of positive divergences. Even with this new low, still have the positive divergence there. And RSI, not as much between these two swing lows because this one's come down and pretty much matched it. But we do have a positive divergence coming all the way back to these lows back here. We got certainly a lower low in price, but we still maintain a higher low in the RSI. And the MACD on the weekly is still bearish to the downside on the weekly, and the daily open to the downside as well. So there's still some bearishness in this market, from what I can tell. And I think, but with that, I do think one more lower low to come may finish this move to the downside and allow for a stronger move to the upside. Let's take a look at Great British Pound versus the dollar. All right, so previously I was looking at this as wave 1, 2, 3, 4, 5, and it looked like we might have been getting a start for a new move to the upside. Obviously that didn't take shape, reversed right back down and produced a new low. So I'd have to look at this a different way. I think it's more than likely we've got wave 1, wave 2, wave 3, wave 4, and then we have a sub 1, sub 2, sub 3, sub 4, maybe one more incremental low for a sub 5 of 5 to finish. This could be an ending diagonal type pattern to the downside. It could be completed next week, and then we may see a bounce back up. Now, I'm only guessing that we're getting a bounce back up. I don't know that this is going to be a major low of any kind or even a midterm low. But this manic drive to the downside, breaking past through these key levels of support, does invite at least a sizable bounce, maybe up here to the 5,600 level for a few hundred ticks. So I'm still interested in getting in on the long side of this market, but I'm going to wait and see if we get one more incremental low and some sign of bottoming action before getting back in again. The daily, still closing with the QG3 here, still bearish to the downside. Weekly, certainly very bearish. We've got this outside double key reversal, setting a key high at 58.18. So that's one reason I think it may just be a three-wave corrective bounce before turning lower again, potentially. EWO, not much to see there. The RSI, come down here and we break in the 40 level. Broken, excuse me, my English sometimes. We've broken the 40 level, coming down here into 36, so that's not providing any support. That's bearish. And the QG3 on, or not the MACD is open to the downside, bearish on the daily, weekly, still open to the upside just slightly, but the histogram bars are shrinking, so we're losing steam there. So overall, we for the Great British Pound, I do think we could be coming into at least a short-term bottom here pretty soon with a bounce to the upside. The nature of that bounce, I suspect, is only going to be a three-wave corrective move. If it's a fast impulse all the way back up to 5,800, then so be it. That would certainly alter the Elliott wave picture to something probably far more bullish, but I wouldn't count on that just yet. All right, so let's dive right into the Elliott wave count. And starting off with the US dollar, we've come up here and we broke above the extent of wave 1 down, so this certainly cannot be counted as a wave 4 correction. It has to be something else. One potential is a sharp wave 2, but I certainly like to see my sharp wave 2s of an embedded count. I prefer to see them end below the connection points between the origination of 1 right up here and the end of wave 2. The trend line that's formed there, that's generally where you want to see your any embedded wave 2 end, and you can see we've clearly broken above that, so that reduces the probability of this subwave 2. Is it still possible? Absolutely. It's really not dead until you break above the end of the other wave 2, which would be at 97.07. So could we again break lower into a new quick lower low into a wave 3 of 3? Possibly, but the probabilities again just not quite there. We'll also come up here and the market did not respect the 61.8% Fibo either. So this is leaving us in a quandary here. Very neutral, tedious picture. It is possible that if we see some choppy sideways movement over the next few days into September, there's a possibility that it could be a bull flag, and then we see another surge to the upside. So in order for this to be a subwave 2, we're going to need to see some quick, decisive movement to the downside, very impulsive, in order to really confirm that this is in fact a subwave 2. So really just not much to do here. It's just very tedious. We're going to have to wait and see how this moves along. We're still technically in a downtrend because you have a lower low than the last swing low, a lower high, lower low. This is still a lower high. So you're still technically in a downtrend until 97.07 is broken. Same thing with the euro. We're still technically in an uptrend until we break below the 1.1009 level. Euro's a little bit in better shape. We're still hanging out just above the purple trend line. That's okay for a sub 2. We definitely broke below the wave 1 top, previous wave 1 top, so that's can no longer count that as a wave 4. That's for sure. So the action, the attitude is everything. So the action, if we get sideways choppy movement that kind of eats through this purple trend line and a kind of a bear flag formation, then we're probably going to dump even further later on. But a quick move right back up to the 1700 handle, that would be very bullish and could lead into a wave 3 of 3 to the upside. But for now, the market doesn't leave us anything to go off of as it closes right there at key support. All right, we've already talked about that. Here's the Aussie dollar. I think what we got here is a wave 1, wave 2, wave 3, 4, working on wave 5. Let me zoom in on it. me get rid of this Fibo retrace. So it looks to me as though we're working on some kind of ending diagonal pattern here, possibly with a wave 1, wave 2, wave 3, wave 4. It looks like it could be triangling out with an A, B, C, D, E possibly forming. And then one more thrust to the downside for a final fifth. And then from there, it could see another surge right back up to 74, or possibly much higher, maybe even up to 76. So this is going to be worthwhile getting into once this last leg to the downside finishes with a 5-wave move. Then we'll look to get long and enjoy a shot to the upside. It could be just a corrective move, possibly something more significant. Really not sure yet. Canadian dollars also inversely doing about the same thing here in USD CAD with what looks like a wave 1, 2, 3, 4, and now working on a final fifth to the upside in kind of an ending diagonal pattern as well. Looks to me like you've got wave 1, wave 2, wave 3, wave 4. It looks alternating too. Wave 2 is flat, wave 4 is sharp, and now waiting on maybe one more incremental high into 5 of 5, and then from there could see a corrective move down, maybe to fill in this manic shot up for one. There's certainly some manic behavior here. That's another spot we could come down and fix. Obviously a full reversal all the way down here to the 1900 handle would suggest that a final high is in. So we'll wait and see. But so coming up in the next week or two, we're going to be looking for a potential top here in this market. And one potential is the long-term 61.8% Fibo there at 34.61. So watch for that possibility of the price coming up, testing that Fibo level here fairly soon, and then we'll see a possible rejection or correction to the downside for a few hundred ticks. So it's going to be a worthwhile trade in my opinion, and possibly very low risk. So be watching for that. All right, so that concludes my Forex coverage for this week. I hope you all appreciated it, and we'll be talking to you later. Adios.